Hey guys, happy Sunday. My name's Max. My channel's name's The Covered Caller. All right, so we're going to have a little Sunday morning study session. I don't really have anything scripted out, but I want to try to help folks find alternative ETFs. A lot of people aren't happy with ULTY. ULTY used to be in a lot of people's portfolios because it was like $3 billion in assets under management. I believe it sits at under $2 billion now, something like 1.8. So there should be a lot of money on the sidelines going into other safer alternatives. And I want to look at some of these safer alternatives. I mean, there's some good ones out there. And I have a lot of these safer alternatives myself. So I kind of want to show you what I was thinking about the safer alternatives. So let's check this out. First of all, let's just start and look at the market. Let's look here at Bitcoin. I'm worried because Bitcoin has been, in a bear market. It's down about 27% from highs. It's under the 200-day. It's failing at its moving average. It's making a series of lower highs and lower lows. It's just the definition of a bear market. Doesn't mean it can't turn around soon, but I think until it does, a lot of these ETFs will be under pressure. But in any event, I see a zone. I see a buy the dip area right around 90 that I think might turn this around. If it gets underneath there, it looks like 74, 75. Will hopefully the dip will be bought. I know people that are planning on buying at 90, and I think that's a lot of you guys. So we'll see. We shall see. That's a quick little market update. We can also look at weekend Wall Street just to see how the stock index futures, where they would be priced at if they were trading. This is an overseas company that projects the futures price, even though futures are closed right now. So basically futures are flat. These are S&P futures. They're basically flat. So we'll see. We should know here about 5 o'clock this afternoon. I can't wait. All right, so let's get into today's video. So let's look at I want to look at some good alternatives. And let's just kind of see what's going on. Let's just run a few tests. Now, let's start with WPAY. Let's start with YieldMax. I mean, not YieldMax. Let's start with Roundhill. I mean, everyone knows that Roundhill is a lot better company than YieldMax. Roundhill doesn't have erosion. They have all kinds of good things going for them. They really are a good company. In fact, I own WPAY myself. I bought it about 2 or 3 weeks ago. In any event, let's just for comparison purposes, I just put in GPTY. Anyway, so here's WPAY against GPTY. And this is just for the quarter. This is, September, October, November. Wow. That's not a good look for WPAY. Okay, well, maybe I'm cherry picking. WPAY has, they have a little bit of leverage. And of course, the market's been pulling back. They're down a little bit. We'll give WPAY a break. Like I say, it's one that I have myself. It's a good one. It's a good one. All right. So forget about WPAY. Maybe I'm cherry picking though. Let's just go since inception. I probably programmed the dates in ahead of this and picked the best dates and stuff. We'll go since inception. Are you serious, WPAY? Well, WPAY's only been around since September. You can't go since inception on them. That is since inception for WPAY. Okay. Well, yeah, definitely don't want to cherry pick or anything. So, but Roundhill, legit is a great company. Everyone knows YieldMax sucks and Roundhill's really good. So, and they are. Roundhill's a good company. So let's go with something like XPAY. Now, XPAY's, for the people that don't like covered calls or whatever, XPAY just sells a little bit of the stock. They pay a target 20% yield. They give it back to you in a cash efficient manner. XPAY's a wonderful, wonderful ETF. So we'll just look at this quarter on XPAY. Ooh, that's a bad look, XPAY. Well, the good thing is XPAY pays a higher yield. Well, no, they don't. They just pay 20. GPTY pays 30. GPTY is beating it on yield, beating it on total return. Dividends reinvested, dividends not reinvested. Okay, well, obviously, I'm cherry picking. Let's go back. That was since inception. Let's look at XPAY just this quarter. Ooh, that's not good. Now, to be fair, XPAY did, or that's since inception, but XPAY did protect capital better on the way down. XPAY is not a bad stock. I know a lot of you guys like it, not a bad ETF. but it's, you know, it's not looking great right there. Less yield, less total return. Anyway, like I say, maybe I'm, you know, let's put a real round hill fund in there. Let's put QDTE. I mean, that everyone knows that's a good one, you know, and that pays a giant yield, pays like 35% yield. Okay, well, yeah, that's not a great look. Now, but to be fair, QDTE does pay about 30%. GPTY pays about, or QDTE pays about 35%. GPTY pays 30%. So QDTE is winning in the yield department, and could work. You know, it's a good fund. Now let's run XDTE. So that's also from Round Hill. Oh, that's ugly. But like I say, these do beat it to beat GPTY in yield. Okay, well, I'm not trying to pick on Round Hill, but it does look like XPAY did decay. I made a video once called XPAY is going to decay. Well, everyone knows, though, that the really good ones from Round Hill are MAGY. That's, I always hear, you got to get MAGY. I have MAGY. MAGY's a great ETF. Okay, well, I'm sure it could beat GPTY, right? You think so? I don't know. Let's see. Oh, that's a bad look for MAGY. Yeah, well, okay. I mean, that's since inception, you know. Let's just look at for the quarter. Well, that doesn't look quite as bad. For the quarter, they're doing a little bit better. All right. Well, MAGY is a good fund. I mean, nothing wrong with MAGY. All right. So let's stop picking on Round Hill. Everyone knows the Curve. I mean, you know, Curve, Howard eats his own cooking. You've seen his Twitter feed lately. He's been kind of SPYI. He eats his own cooking, and his ETFs don't have any of that erosion. All right. Well, I mean, so let's look at KQQQ. Oh, okay. Kings of Tech, huh? Well, I don't know what to say about that. Now, KQQQ pays a higher yield than GPTY, right? Wrong. It pays 8%. GPTY pays 30%. So GPTY beats it in yield. Dividends not reinvested. We can go back since inception, or we can go just the past quarter. So let's go since inception, you know, because I'm probably cherry picking this. Well, that's pretty good. That's the closest one that we've seen yet. Good job. KQQQ could definitely work in people's portfolios if you're fine with 8% yield. You know, I mean, it could definitely work. But now GPTY does get it by a little bit, but that's, you know, and that's since inception, but that's probably just me cherry picking again. All right. Well, I'm not going to pick on, you know, Curve or whatever, but certainly, you know, the Curve single stock funds, those ones have zero erosion. Everyone knows that. You know, certainly something like TSLP. I mean, you know, we'll just look at TSLP for the past quarter. Okay. Well, I don't know what to say about that. Let's just plug in TSLP since inception. Okay, well, GPTY wins again. Well, maybe MSFY. There's got to be something from Curve that could beat this thing, right? No, it's not MSFY. That's since inception. Okay, well, just to make sure I'm not cherry picking, let's check MSFY this quarter. Now, this one comes pretty close too. That's a close competition. All right, good job, MSFY. MSFY might work for you. All right, well, I'm really not trying to pick on Curve. Everyone knows, hey, bro, you gotta look at NEOS. NEOS is the best. They're out there. I mean, ETF.com says QQQI is the best. It won the ETF of the year last year, and QQQI is a good ETF. I'm not saying it isn't. Now that's since inception. Okay. Well, it's I don't know what to say about that. Now the thing is, QQQI pays a lot higher yield, so we could forgive it for having a little bit less total return, right? No, QQQI pays 14%, which is generous. GPTY, did I mention it pays 30%? Okay. All right. Well, you know, maybe I'm cherry picking there. Let's, you know, maybe SPYI from NEOS. No, That's since inception. SPYI is a good fund. Okay. Well, everyone knows the trump card on all of these is TSPY. TSPY is the one that, it's the best one out there. Everyone knows that. TSPY is a good one also. I really like TSPY. They have a really good strategy, staying uncapped at night. They get a lot of extra upside. They sell ODTE options. They do a great job. They pay about 13, 14%, sometimes 15. So GPTY pays more yield than them, has higher total return, not by a little bit, by a significant amount, beats some dividends reinvested, dividends not reinvested, since inception, the past quarter, it doesn't matter. To be fair, TSPY did a great job protecting capital in the pullback, a lot better job than GPTY did. GPTY is not the be all and end all, but it's performing pretty well. Well, that's kind of shocking. Well, the other thing is everyone knows, just like everyone knows YieldMax sucks, everyone knows the dividend channel sucks. You can't really trust these numbers. You got to look at total real return, and you got to look at after inflation, adjusted for inflation is what I'm trying to say. Okay, well, so I ran GPTY against WPAY, against TSPY, against XPAY, against QQQI, against SPYI, against SPYI, against FEPI, against GPIX from Goldman, KQQQ, and JetQ. Now, to be fair, KQQQ was the closest one to it. KQQQ is only a half a point behind, and KQQQ is a really good fund. So that one might work for the people that are off the Ulty bandwagon. Now, remember, you're only going to get, an 8% yield with KQQQ, but it could definitely work. Now, JetQ, that one is super stable, right? Well, it's a little bit too stable. Okay, so, but, that's just one way to look at it. Let's look at it another way. Let's just look at overall return in the exponential trend line. Because everyone knows, exponential trend line, it's beating all of them there as well. Okay, well, let's just look at the growth. We'll just lump sum, invest $10,000 and look at it that way. Nope, it's GPTY is winning again. So, but let's look at this. Annual returns year to date. I found a winner. or one of these. No winners. To be fair, there are a few that are beating GPTY. Tugin, TUGN, which is a really good fund, is beating it by a little bit. And there was maybe one other. But anyway, so all right. Let's talk about that. So does that mean we should rush out and buy GPTY? Well, no. GPTY has been down quite a bit lately because, AI has really been pulling back, not as far back as crypto, but GPTY, is it going to continue to do as well as it has been? Maybe not. Not if AI keeps going down. But of course, to be fair, a lot of those other companies like WPAY, they have a lot of AI exposure as well. Okay, so let's see what's the deal with GPTY. Let's look at the stocks in their portfolio. All right, we have AMD, Google, Amazon, Apple, Ariston Oryx, Broadcom, Intel, CoreWeave, IBM, Marvell, Facebook, Microsoft, NVIDIA, Oracle, Palantir, Qualcomm, CRM, ServiceNow, Snowflake, TSM, and TSLA. It's a pretty good looking lineup. It looks like big data and AI and mega cap tech. Okay, so here's what I think they're doing where this ties in. Now I'm getting serious about the video. So this is what they're doing to save ULTY. They're making ULTY look more like this one. And I think with good reason, because this one's beating every other stock on the street, that every other high yield ETF that everyone's in love with. And me too. I have a bunch of those. I have WPAY. WPAY is a good fund. I'm just showing it for comparison purposes. I'm very happy with my WPAY. In any event, so check this out. I did a little, well, first of all, let's talk about this. So according to the Wolf Financial Spaces, Mike Coe, the brand ambassador for YieldMax, I think that's his title, I could be wrong, for YieldMax, was on, and he said they were making some changes. They're adding more mega cap tech. That was on Wednesday, and they added Google the other day. They have right now they have CoreWeave, which is also in this one. It's not really mega cap, but anyway, they have CoreWeave. They have some Palantir. They've been sprinkling in some of these, you know, some of these bigger mega cap tech. So here's the drawback to that. So it looks like ULTY, I'm thinking they're going to do about a third. They're going to make I think the new build is going to be about a third of those types of stocks. Right now it's about 20%, but I think they're adding gradually. We'll see. I'm going to keep monitoring it. But if they do put a third of those types of stocks in, the Palantirs, NVIDIAs, you know, those types of ETFs, those pay a lower yield. And granted, because KQQQ only pays 30%, which was higher than a lot of ones that it was beating, but that's neither here nor there. So if we just do a little analysis, we have a 30% yield, and I'm saying it'll end up being a third of the portfolio. And then the rest of the portfolio will stay the same. It'll be the crazy stocks. They yield about 75, maybe a little bit more, but I'm trying to be conservative. So you have a third at 30% and, 2/3 at 75%. Well, that's going to be a new yield on ULTY of 60%. I know that's kind of low for people that like the 80% yield. Of course, the idea is these ETFs ought to add some stability. And just by looking at what GPTY is doing, it looks like it's working. Let's do this. Let's say they only do use 25%. If they only use 25%, then the yield of the safer, bigger cap tech, the yield will be about 63%. Now, right now they have about 20%. I eyeballed it, but it looks like 20. It could be 15. But they're adding more every day. So at 20%, that means they would have 80 of the old lineup, and that'd be about a 66% yield. So I think that's what we're going to see in the future with ULTY, between a 60 and 65% yield, something like that. Hopefully more stability. Like I say, it'll work. This will work really well, especially if the market bottoms out here and AI starts turning around. As long as AI and tech and crypto's pulling back, it's not going to be fun for any of these ETFs. Or for a lot of them. So that's why I start every day by looking at the market. Rising tide lifts all ships. But to be fair, GPTY has already pulled back quite a bit because it's heavily invested in AI type stocks. AI stocks have made a high way earlier in the year, and then they made another high in July and haven't come back. GPTY has a bunch of those kinds of stocks in there. Even when you factor in the recent pullback, it's beating a lot of competition. So here's the problem. So I'm sure that a lot of people have GPTY, right? It's got to be, at least $500 million. It's not as much as ULTY because people like yield. I get that, and whatever. But so this, you think this be like $500,000 or something. No, it's 82 million. So no one buys it. Why does no one buy this? Well, it only has a 30% yield. Okay. It only has a 30% yield, which is more than a lot of its competition. And it's winning on total return, dividends reinvested, dividends not reinvested since inception for this quarter. People like to yield chase, though. 30% isn't enough yield for a lot of people. But those same people will tell you, just go get TSPY, go get QQQI, 14, 15% yield. Those are good funds, not knocking those funds. I'm just showing by comparison purposes. All right, guys. Well, that's this morning's Sunday study session. I will talk to you guys later. And remember, as always, not financial advice. And as always, you can support the channel if you like this kind of content at paypal.me//max convexity. Do your own due diligence. Check all these numbers that you hear from me or from anyone else with a licensed financial planner. I'll talk to you later.